I think this is going to be an inflationary decade. You could easily have a wage price spiral. You're going to really, I think, have the ingredients for a period of stagflation. And that's why I think that in general, broadly, I think we have the right conditions for precious metals to continue to do well in the way that they did in the 1970s.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for December 25th, 2023 through January 1st, 2024, while supplies last. First, we feature 1 10th-ounce gold maples at just $30 over melt with a minimum order of 5. Next, we have silver eagles at $4.99 over spot, making this a great time to swap silver bars into silver eagles at the lowest premium in years. Finally, constitutional 90% silver is just $3 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Welcome back to Liberty and Finance, everyone. With us today is our good friend Peter Krauth, the author of The Great Silver Bull and the editor of the Silver Stock Investor newsletter. Peter, thank you so much for joining us today.
Always a pleasure, Elijah. I'm glad to be here.
Well, it's great to have you. At the end of the year here, it's a great time to look back at 2023, see what we've seen in both the gold and silver markets. I know you really do specialize in silver there, and I did see your talk at the Silver Symposium, which was very insightful there. I'd like to ask you a few questions about that, and also kind of get an outlook for 2024. First, if we can kind of get a wrap of what we saw in 2023, it was a very interesting year. Silver and gold, despite the rate hikes, these historic rate hikes we've seen, really held up quite well.
Absolutely. And I think that's something that's really sort of key to understand. Gold in particular has been so impressive because if you think about some of the headwinds that gold has faced this year, we've had rates really high, have been sustained high. The Fed, until at least the last meeting, has been talking quite hawkish, and that it's going to be higher for longer, all that sort of thing. So with that, you've had, until again recently, a relatively strong dollar. You've had bonds with providing some pretty high yields. At one point, I think it was in early November, we had nearly entire Treasury market. All the maturities were at or above 5%, which was huge. And so these are big headwinds, and stocks started to do well. So the broader market. So these are all pretty strong headwinds for gold and silver. Gold, as I say, really held up particularly strongly, and that was quite surprising and quite welcome. And I think that one of the big reasons, if you think about having all these headwinds and staying that strong, you kind of have to ask yourself what's driving that. And so I think the answer mainly to that has been central bank buying. I think last year it was a record year and by far outpaced any previous year. So we were at about 1,080 or 1,083 tons of gold bought by central banks. And this year we're on pace to nearly match that, somewhere around 1,000 tons again for 2023. So that's been massive buying by central banks. So I think that the physical market has been very much supported by that kind of buying. And I think that's what has kept gold so close for so long to somewhere around the $2,000 level. And now we're comfortably above it. Again, very bullish. I think we're going to see a strong year for gold and by extension silver for similar and as well as for some different reasons.
You mentioned how they've stayed strong despite the rate hikes. If we look back historically, for example, in the 70s and 80s, when we saw a lot of inflation, which we've seen recently, and then the Fed raised rates aggressively under Volcker, what kind of price action did we see there? Because I think the common understanding is that when we see rate hikes, this should put pressure on precious metals, but it's not always the case.
No, exactly. I think what happens is that people forget that the precious metals are kind of much like the stock market. So they tend to sense what's coming a certain length of time in advance. And so if you look at the 70s, I think that when you saw these considerable rises, it came in waves. It wasn't obviously a straight line up, but when it came in waves, it was in anticipation of rate hikes, and to some extent because they knew that the Fed was hiking rates in order to fight inflation, and they knew that eventually that was going to have to stop because they were going to relatively achieve their goal, which was to sort of slow things down in terms of the economy. And what comes after that is rate cuts. So I think the precious metals senses that cycle, and so starts to price it in. And so, I've been asked, in the last sort of few weeks, what I thought for next year. And one of the things I do think is that if we start to get rate cuts, let's say roughly by about mid-year, I would not be surprised, and I'm not going to right now say from what level specifically, but I would not be surprised to see precious metals actually start to dial back a little bit at that point, because a lot of that will have been priced in, and it's going to be buy the rumor, sell the news. So when the news comes, the precious metals, which will have most likely priced in these cuts, will say, okay, I knew this was coming. Now it's come. And so they'll back off. Again, I don't think necessarily too much, but I could see that we could get a bit of a lull mid-year, and then I think, but overall it'll pick back up, and it'll be probably a strong first, both and second half of 2024 for both precious metals.
Now, at your speech at the Silver Symposium, you also looked at what happened in the 70s with respect to silver, gold, and the stock market. Now, right now, people are saying that the stock market is making all-time highs, and they're thinking it could break out. At the same time, we're seeing gold, making all-time highs, and people are thinking that could break out too. So when we look at 2024 in the years ahead, what gives you confidence that precious metals will be the ones to outperform the stock market?
I think we're going to head into a similar period, which was a period of stagflation, which until the 70s, economists thought could not happen. It could not exist. And that's where you have a slow economy, you have high inflation, and you have high unemployment. And so we have not had two of those yet. So the economy's remained pretty resilient, but there was a ton of printing that took place, in the wake of the COVID pandemic. And we've had the inflation part. We have not had the high unemployment. And I think that what's likely to happen is that the effect which took place in the 70s was you always had a lag, but the central banks would start to raise rates, and then you'd have this. And in fact, interestingly enough, there's a great chart by the people at Crescat, Tavi Costa specifically, that shows the 70s, shows these three successive waves actually. So it goes up in the late 60s, early 70s. It comes back down, and that's because the central bank, the Fed, hikes rates. And then you have a second wave that's sort of mid 70s. Again, the central bank raises rates and then backs off. So you have inflation come up and then back off. And then in the very late 70s up until 1980, you have this last massive wave of inflation. That's when you had Volcker really step in and be aggressive in terms of rate hikes. But there, in this same chart, you have layered on top, you have unemployment. And unemployment actually follows basically the same pattern, but with a lag on average of about 2 years. So here we are. We started, the Fed started raising rates in early 2022. We're close to the start of 2024, say, first quarter kind of thing. And so if you have a similar time lag, what we might see is start to see unemployment start to hike up markedly in the first quarter of 2024. Now, I've got to say, nothing's set in stone and nobody knows for sure. What you do have this time around that may counterbalance is that you do have a smaller pool of workers. And that's something that demographically, I think was quite different in the 70s. So that may actually help sort of temper a spike or a considerable rise in unemployment. But we certainly, I mean, I think that the reason that we're going to see things play out similar to the way they were in the 70s is that, again, you may not have quite the level of unemployment, but I do think you're going to have inflation that's going to continue. I think this is going to be an inflationary decade. Lack well, you're going to have you could easily have a wage price spiral. You could certainly have, or you could argue that you're going to have ongoing shortages and tightness in terms of supply of all sorts of materials, and especially anything sort of relating to commodities, because there's been underinvestment for at least a decade. And so you're going to really, I think, have the ingredients for a period of stagflation. And that's why I think that in general, broadly, I think we have the right conditions for precious metals to continue to do well and to perform the way that they did in the 1970s. And so, and I do have a chart that I've used, over the last few years, also again in the book, that shows how if you look at where the Dow, for example, and the S&P were, I think it was roughly 1970 to 1980. You had huge returns in silver and in gold. Gold was up, from memory, about, I believe it was 1,400%. So 14 times from say 71 to 1980. You had silver up, I believe it was 3,600%. So 36 times from 71 to 1980. And without accounting for inflation, you had the S&P and the Dow were basically flat. So over 10 years, if you held the index, either the S&P or the Dow, you were essentially flat over 10 years, and gold gave you 14 times return. Silver gave you 36 times return on your money. So, I mean, that's a really, really, strong argument for, if nothing else, to at least have some exposure to the precious metals, to bring you some diversification and not really completely rely on stocks. And bonds are something else completely. I mean, I do think that we're going to continue to have, yes, the Fed will likely start cutting, central banks will start cutting, this coming year. But I do think that we're not going to get back down to these, 2% inflation targets, at least not for any kind of extended period of time. I think we are gonna continue in a period of extended inflation, and that with that, we are going to see the stock markets suffer and likely dramatically underperform. So again, I think here you don't have to be all one thing or the other, but the argument for inflation protection and precious metals being essentially the ultimate when it comes to that are very strong for, as I say, at least the rest of this decade.
Now, what evidence is there that the people in the know, right, the big investors, are seeing some of these trends? I know you pointed out the central banks are accumulating gold, and also in your talk, you talked about how there are a lot of institutional investors or institutions investing in PSLV, which is the Sprott Physical Silver Fund. Your perspective on that, some of the data that we have showing that some of the people in the know are actually are seeing what's happening and investing in precious metals.
Yeah, so there is a guy. I'm trying to think his name, but he has a report called SRS Rocco report, and he does some fantastic research on energy, return on energy investment. And he does talk a fair bit about silver, and he had a great chart that showed, I think it was going back, say, 3 years or so, the amount of the Sprott PSLV that was owned by institutional investors. And I think that was somewhere around 8%. And then right now we're closer to about 18% of institutional investors own the outstanding shares of PSLV. So to me, that is very telling. They're they want exposure to silver, this is an easy way to get exposure. It also provides them easy liquidity. And if you look at how ETFs, silver ETFs are built, if you read, some of the fine print in the offering documents, for me at least, I have read that, and I certainly feel that the Sprott is the one that you want to have, that you want to hold if you're going to buy a physically backed silver ETF. So I find it very telling that you see dramatic growth in terms of institutional holdings in that silver ETF. Now, I can't comment on the other ones. Maybe the percentages have grown as well over the last few years. But certainly, I think that these guys have done their homework, and they probably know that this is one of the better silver ETFs to own.
As we look into 2024, can you expand on some of the other drivers as well? I know there's industrial demand, which back when Biden was elected, and a lot of people were thinking that there's going to be this new green energy initiative. People were very bullish on silver. How much of that story has played out so far, and are you still looking for a lot of industrial demand from solar and other green energy initiatives?
Right. So, yeah, absolutely. I think that to understand the silver market, you have to understand solar, because it has become so important to silver. And silver has, over maybe the last sort of 30 years, 40 years at least, has gradually morphed. Gradually, I say, and not completely and not distinctly, but I'm going to say has become somewhat more of an industrial metal, just because we're finding so many fantastic uses for silver. And I mean, almost on like a weekly basis, there's some new patent being filed for a different application for silver. And I think if you look at what happened over the last several years, but especially in the last year alone, in terms of demand for silver on the industrial side, that was up 8%, or the Silver Institute believes that for 2023, it'll be up 8%. So 8% growth of industrial demand for silver across the board, all the industrial applications. Whereas back in April only, when they put out their survey for 2023, their expectation was that it was going to be 4%. So they actually, late in the year, they've revised that and doubled the growth of demand for silver from industrial applications. And specifically, what's interesting is that solar, which is a big user of silver, represents 30% of all industrial demand for silver. Now, last year, it was 140 million ounces that went to solar. They were forecasting back in April that it would be 161 million ounces that solar would consume. And in this latest revision, and I do want to say that I've been saying for months that I felt it would be closer to 180 to 190 in that range for 2023 in terms of silver going towards the solar industry. And in their revision back in mid-November, in this calculation where, it would be 632 million ounces of silver for the industrial sector. And that 30% of that would be solar, 30% would be only solar. So if you do the math, that's just under 190 million ounces. So that was closer to what I was expecting, and it's been revised up considerably from 161, and a big jump from last year, 140, and the year prior was 110. So we're looking in 2 years, solar has jumped 73% in terms of its requirements from the industrial sector, and in terms of its consumption of the number of ounces in just the last couple of years. So really, solar is key to understand in terms of what's driving silver demand across the board. It's very important, and there are a couple of specific things, and I think we're going to see some changes in terms of when these charts get revised as time goes on. But there's something called thrifting, which is solar panel manufacturers trying to, naturally, you'd want to do this, is look for ways to achieve the same output, but cut your costs, right? So you find ways to be more efficient and so on. And so they've found ways over the last, say, 10 years or so to be more thrifty and to cut the silver consumption in each solar panel and still achieve the same output, energy output. So that's been trending down in the last couple of years. It's kind of sort of really flattened quite a bit. And but I think that we're at an inflection point that's actually going to change and start to trend up now. And so the big reason is that you have mainly three technologies in solar. The incumbent, or the one that's more common right now, is called PERC. And then you have something called TOPCon and HJT. So TOPCon takes about 50% more silver. HJT takes about 150% more silver per panel. But for that extra silver, you're getting considerably more energy output. So if anybody wonders, why are you going to put more silver into a solar panel? It's because the cost is justified by the energy output. But that, if you think about what the implications are, then, and I have to say too, that these technologies are being very quickly adopted. So about 3 years ago, if you add together these two newer technologies that require more silver, they were about 10% of solar panel manufacturing capacity. This year, they're already expected to represent 35% of solar panel manufacturing capacity. And I've read one forecast that in 2024, PERC, which is the one that requires 50% more silver, is going to already itself represent 50% of manufacturing capacity in 2024. So, to kind of, dial back and say, okay, well, what was my point? It was that if you have these technologies being adopted very quickly, as much as you may want to try and be thrifty with your silver consumption in each panel, that's out the window, really, because these panels, the way that the technology works, you have to use considerably more silver. And again, it's justified for the energy output. So I think that this line that we've seen, that thrifting that's gone gradually down, and then sort of flattened the last couple of years, is about to take off. I think that we really are at an inflection point, and silver consumption per panel, because of these new technology, is actually going to start to trend higher. And so that's just going to compound the deficits in silver, which we haven't talked about.
When people hear that there's a silver deficit, what does that mean? And what's your forecast on the price of silver based on that? Sure.
So the deficits have existed for the last 3 years, if you include this year. And last year's was a massive deficit of 200, I think, in just over 250 million ounces. And silver is a billion ounce a year market. So about 80% of that comes from mining. And then the others, variably 15 to 20% will come from recycling. So between the two, you have about a billion ounces available from those two sources every year. Now, when the Silver Institute calculates its deficit, they say demand has surpassed those two sources. Now, your viewers are going to say, well, how can you have a deficit, and certainly how can you have an ongoing deficit? Well, there are other supplies, there are secondary supplies, there are inventories that exist in the market, and unfortunately, even for professional research services, they're hard to gauge and to know exactly how much. So nobody really knows quite how much silver out there that there might still be. But there's certainly plenty of silver that people have accumulated in the form of coins and bars. You have silverware, you have jewelry. The higher the silver price goes, the more some of that comes out and comes back to market, because people will, for whatever reason, want to cash in. But with the silver price relatively low, none of that really comes that much to market, because people don't feel they're getting enough to sell their scrap or whatever it might be. So, but that is mostly how that shortfall is made up. So from existing inventories, other than, either recycling or mine supply. Now, we know that there is silver, that is an inventory that exists in silver, some of the silver ETFs. So some of the holders of the ETFs, not all, can, if they own enough units in that ETF, can stand for delivery. So they can ask for physical delivery of if they own enough units in that ETF. And then you have the futures market. I'm no expert in that, but I will say that to my understanding, if you own silver futures, you can request delivery in kind at the expiry date of your contract. So, if you look at, and I do look at this regularly, but it does seem as though in the past sort of couple of years, the inventories in the futures markets, the COMEX, and the London Metals Exchange, that these inventories have been coming down very regularly. So it seems as though you have holders of futures that are taking delivery gradually more and more. So all of the indications are that whatever the inventories are that are out there are gradually shrinking. So we can't know exactly when. If I had to guess, I'd say, we could be at somewhere maybe around another couple of years at most, where it kind of dries up. And so you don't have the secondary supply to draw on anymore, and the deficits really start to hit home. And to give you an idea what the sizes of the deficits are. So this year is not quite the size of last year. It's still sizable. For 140 million ounces roughly is what the Silver Institute is expecting for 2023. Last year, as I say, was around 253 million ounces. And if you add the last 3 years, including 2023, so 2021, 22, 23, we're at about 475, I think, million ounces total cumulative deficits over those 3 years. So 3 years of deficits represent 50% of the total supply for this year alone. So they really are very meaningful. And there was some research that was put out a few months back by Bank of America, Global Research, and they forecasted the potential sizes of the deficits in a number of critical metals. And their forecast was the most dramatic for silver. If they looked out to 2025 and then to 2030. And in the case of silver, they forecast 120% deficit in the silver market because they're looking at all sorts of things. They're looking at, of course, the demand from solar. They're looking at the demand from investment. And they're looking at the lack of supply. And so they think that silver could absolutely have one of the most dramatic shortages, going out several years. So, obviously these are forecasts. It's hard to know, but even if they're off by 50%, it's still dramatic. So again, there's one way that this gets resolved. It's by higher silver prices.
No, there are kind of two possibly competing fundamentals for silver, right? So you have the industrial component and you have the monetary component. And the monetary component, people go towards real money when there's a crisis. And you've talked before about the risk of recession soon. But if there's a recession, that typically means industrial demand would go down. So how do you see that playing out? If we do go into a recession, do you see industrial demand pulling down the silver price at all, or do you see that not being affected?
So yes, I do see the risk of softening industrial demand having an effect on the price, and I would not discount that risk or that risk factor. Certainly, it's there, but I would say that there are some reasonable odds that gets tempered by, as you say, one of the ways that would be tempered is through demand for safe haven in silver. Obviously, gold at $2,000 an ounce and now above 2,060 or 70 almost. That's pricey, and it's at or near record highs in absolutely every major fiat currency. So that's pretty dramatic, and that's certainly one way that we've seen historically that defines a bull market for gold. So silver tags along. People will become a lot more, I think, this year aware of what's going on in the gold market. It's quite surprising, actually, that it hasn't attracted more attention, especially with, I mean, it has started to, certainly with now being above 2000 and at or near record highs for extended periods. So I think that's going to continue to attract more attention. And then when people look at that and they see, an ounce of gold is $2,000, it's going to look pricey for many, and they're going to look for an alternative. And silver is that natural alternative. So I think that the safe haven status and the money status of silver will temper the risk of softness from industrial demand. And there's another aspect, I think, of industrial demand that we have to account for, and that is, especially if you look at the industrial uses of silver, and so many of them are energy transition related. Solar panels. It's in wind energy. It's in EVs. It's in EV chargers. It's in 5G telecom. It's used in upgrading power grids. It's really ubiquitous and irreplaceable, in fact, in so many of its applications. So you could say, all right, so that's fine. All of these things are going to slow down if we have an economic, if we have a recession or if we have economic weakness. But to some extent, that will be tempered, and I think we saw it happen when we had the stimulus from COVID. We saw it. I think perhaps not the first, but at least the second major event of that was in the financial crisis. Going back to 2008, 2009. Increasingly, when you have governments stimulate to counter the effects of economic slowdowns, recessions, anything relating to green transition and climate and so on, and infrastructure is all very well received. It sells well, it sells easily, because the population basically looks at that and says, yeah, okay, well, you're going to stimulate, you're going to try and create some demand and some inflation potentially, obviously, as well through that. But at least this is broadly, the population benefits from it broadly. Infrastructure, if you think about all of that, if you think about power grid, 5G telecom, and then solar panels, and switching to solar energy, for example. All of this is broadly, widely accepted, and so I think that becomes an easy sell. And so I think the governments will once again sort of fall back on that and help support the demand for silver through stimulus through these programs that they have.
Before we let you go, Peter, I just wanted to thank you so much for your time today. And if our viewers are interested in learning more, they can read your book, The Great Silver Bull, or they can find your newsletter, the Silver Stock Investor Newsletter. Can you share a little bit about these resources and also any last thoughts you had?
Yeah, absolutely. So the book was published last year, so April of 2022. April or May, in any case. It's available in print, in audio, and in Kindle. You can just go and Google The Great Silver Bull or go to Amazon. You'll find all the options there. And really, it's about the entire opportunity in silver. So I go through the history of silver. I go through the macro setup, and I'm going to say that sort of the first half of the book is really about the opportunity that exists broadly in silver and in inflation protection kinds of assets, and what's been going on over the last several decades and why this is important. And then I look at the silver market. I talk about the demand supply interplay. And then finally, I talk about how you invest in silver, why, and ultimately how eventually to sell, because we're going to reach a point, hard to say exactly how long from now, but perhaps another 6, 7, 8 years or so, when we reach sort of an ultimate peak in the market. And you're going to want to take profits and cash in, because like anything, it's going to go through probably, I think, a bull market cycle, and you're going to want to take advantage of that. So that's really what the book is about, all about the opportunity in silver and how to participate. And that, for your viewers to keep in mind that you don't have to take outsized risk in the silver market to benefit from it. You can do anything from, I'm very much cover all of this. You can go do anything from physical and ETFs all the way to royalty companies, and even at the other end of the spectrum, the junior explorers. But some of the largest market cap companies in the last decade or so have had tremendous returns. We're talking 1700% in one case, and one of the largest multi-billion-dollar silver companies in a matter of 3 years. So the opportunities exist out there without taking outsized risk. That's all, all about what the book is on. And then Silver Stock Investor is the newsletter that I publish bi-monthly. And it's all about the opportunity in silver. And again, I cover I have an ongoing portfolio. I cover everything, as I say, from physical all the way to junior explorers, everything in between. And it's all about what I buy and sell with my own funds and what I'm doing and my thoughts. And I have up-to-date research every other issue in terms of something specific in the silver market. And it's the only silver newsletter that I know of. So if you're very interested in silver and you want to know about how to invest and what your options are and opportunities, that would be the place to go. So you can find me at silverstockinvestor.com. I'm on X, formerly Twitter, at Peter_Krauth, and I'm on LinkedIn at Peter Krauth, and you can certainly follow me and connect with me there.
Fantastic. Well, Peter, thank you so much for your time today, and God bless.
Thank you. Thanks so much, Elijah. It's always a pleasure.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for December 25th, 2023 through January 1st, 2024, while supplies last. First, we feature 1 10th-ounce gold maples at just $30 over melt with a minimum order of 5. Next, we have silver eagles at $4.99 over spot, making this a great time to swap silver bars into silver eagles at the lowest premium in years. Finally, constitutional 90% silver is just $3 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.